introduce you to a concept that I call inversion charts. An inversion chart is characterized by chronic divergence. So if you look at this chart here, you can see that we have a leg down. And this goes on for quite a long time. Starts in March, April, May, June, and to the middle of July it keeps going. And during this whole time you have a bullish divergence that doesn't amount to anything in the price action. And you can also see that we have a large amount of, or a majority of, the aggressive side is buying. Yet these buyers are unable to change the price. If you have watched my previous videos, you know how this is possible. This is due to limit order sellers that are placing their limit sell walls and absorbing all the buying on the way down. So basically the CEO is distributing to aggressive weak hands. These buyers here, they are weak because they cannot change the price. And so the other side, which is the limit order side, must be strong. And by the way, the CEO stands for composite operator, and it's an old Wyckoff term, and it's essentially smart money. So I have said before that CEO is primarily using limit orders. So if you think about this scenario, it's actually quite an interesting situation where you have all these major long divergences and price still moving down. We can pretty much draw the conclusion that the big guys is in charge of this market and is driving it down no matter what pressure appears down here. So what we can take away from this is that pressure does not necessarily lead to any type of result. It is simply tension, and it will be resolved at some point later on. But let's also take a look at how this down move looks on an intraday time frame, because this is a daily time frame. So let's look at this, and this is also quite interesting. You can see that we have a very elaborate move up that takes some time to generate. And then we have a quick move down. And we can see that all the way through. We have an elaborate consolidation, quick move down. Very slow move up, quick move down. Slow move up, quick move down. And it goes on and on like this. And this is symptomatic for this type of chart. How that gets generated is that the weak hands are buying and the CEO is selling into that. And when there's no more buyers left, then very few sell market orders are needed to push the price down. This is why you also see all these gaps to the downside. So that's something to keep a lookout for. Now, at some point, this market is going to turn, and it does that in this number 2 upswing here. Here, the CEO has probably decided that it's time for this market to be allowed to go up. So these aggressive buyers that we have here, they are still buying, and they are getting results here. And then something interesting happened in the leg down here on the CVD. I call it B, so 2B. There is an influx of aggressive sellers, but that does not lead to anything. So there are two options here. It could be that the CEO is testing to see how much they can push the market down. And indeed, there are strong buyers on the limit order side coming in. But the most likely scenario is that some of these weak hands are taking profits and selling So this is the selling that comes in, and the CEO is actually supporting the price with light participation to create an illusion of strength. So they are actually putting some limit order buy walls down here, so the weak hands can sell into those. And then eventually in C here, we start to move up again. The weak hands understand that this market is stronger than they thought, and maybe this will go higher. So they start to participate again by buying. And you can see that if you look at the CVD, you can see that the different turns here correspond quite well to these what happens up here in the price action. So you have a convergent move up here, for example. So this move is this move here. But at some point the CEO has decided that the price has gone far enough up, and they start to sell down the market. So it's important to understand that although the CEO most of the time is using limit orders, they can sometimes use market orders to manipulate the market. And this could very well be what we see here. And if we look further on, we can see that this happens again in this downswing. We have this huge buying, and it doesn't really lead anywhere. And then we have sort of a convergence going on here, and we drop again. So this can go on for quite some time. The interesting part about all of this is that when you see these type of chronic divergences, these inversion charts, it's quite a sad thing actually, because it means that all the weak hands are always on the wrong side, and as soon as the CEO decides price will go up, and when they decide it's time to go down again, it will just go down. So I tried to actually implement a detector for this inside the indicator, the insights indicator. So let's switch over to trading view, and we go into the insights indicator, and there is this option called passive absorption in here. If you turn that on, it will color areas that have very consistent divergences in them with yellow. So you can see here, it's very easy to detect these. You see this up move has sort of this down move here. So it actually, the chronic part of it, the inversion chart starts here, and then it starts to go down. So let's draw it like that. So during this entire move, we have a bearish divergence, but price is still going up. And the idea behind this indicator feature is that you can more safely follow the price action instead of the pressure when you see this happening, because the market is in the hands of strong order bulls.